It was a rough week for the markets, with the S&P TSX falling 64 basis points on the day. This makes the week yield negative 1.4%, and on the month, negative 1.8%. The year to date is still high at 13.4%, but the 1 year yield is a negative 0.9%. The S&P 500 is also down, is fallen 73 basis points on the day, and has had one of the worst weeks of the year, fallen just under 3%. This means that the total month yield is actually negative at 1.4%, and the year-to-date yield has fallen to 17%, with the 1 year mark being 3%. The Dow is also down, falling 37 basis points, and another rough week of 2.7%, with a month yield of negative 1%. The year to date is 13.5%, with a 1 year return of 4%. The Nasdaq fell 1.3%, and on the week it had a very rough loss of 3.5%. On the month it's down 1.25%, and year to date it's up 20%. But on the 1 year return is at 2.5%. The FTSE 100 had an extremely rough day, falling 2.34%. That is the whole loss for the week, as the rest of the week was flat. For the month, though, it is down to negative 2.7%. On the year, though, it's up 10%, but the total 1 year return is of negative 3.3%. The Nikkei also had a very rough week, falling 2.1% on the day and 2.5% on the week. This means the month loss is 2.8%, and the year to date is only 7.8%, with a 1 year return of negative 6.4%. Crude had a fairly volatile week, just rising 2.3%, but looking on the week, it is down 1.6%. So it has been up and down over the week, but over the month, it is down 3%. Year to date, it's up 14%, but again, on that 1 year return mark, it's down 13%. The big news for the week is that Trump has released new tariffs onto China. He said on Thursday afternoon that he's putting tariffs on 300 billion worth more of goods from China at a 10% rate that will start on September 1st. These products are a lot focused on consumer goods as well as smartphone apparel. Now, experts don't believe that it'll have a significant effect on US GDP, that it'll still stay in the range of 2%. But this does put some pressure on Beijing, and we'll see if they respond with some retaliatory tariffs. Now, this does make a lot of sense when you consider Trump's earlier comments in the week, where he suggests that Beijing is trying to delay a deal in hopes that a new candidate will win in 2020. So this will put increased pressure on them to find a deal as soon as possible. The US labor numbers have also been released, with non-farm payrolls rising 164,000 in July, with unemployment holding steady at 3.7%. As well, earnings had a decent rise of an annualized 3.2%. So this is a fairly good numbers, but it is as expected. In other trade news, Trump has come to an agreement with the EU in regards to beef exports. With the new agreements, the US will export more than 270 million a year worth of beef exports. Now, this is supposed to help some of the farmers and ranchers who have suffered because of the China imposed tariffs on the US, as well as helped US and EU trade relations. An interesting part about this, as you may know, is Trump has threatened to impose car tariffs on the EU, so this might have something to do with them not wanting that to happen, but he still says that those tariffs could be on the table in a future date. Trade isn't only a problem in the West. There's actually a trade dispute between South Korea and Japan going on at the moment, with Japan just previously imposing that South Korea isn't one of their preferential trade partners, and that South Korea will have to individually apply for each one of their products to go into Japan. This has created a lot of animosity between the South Korean people and Japan, as some protests have started in South Korea. Outside of trade, this has been a big week for interest rates, as the Fed has lowered their target rate by 25 basis points. Now, the 10-year yield has been lower than the target rate for a while now, but with this lowering of the Fed rates, I would have expected that the 10-year Treasury had already priced that in and that it would have stayed fairly level where it is being closer to the target rates. But as you can see, for the past week, the 10-year Treasury has actually continued to fall. It has actually fallen about 20 basis points on the week as it falls further down.